Colleagues, can I encourage you to please take a seat, those of us who are. Okay, I think we will get started because we don't have too much time. And also I know, look, I want to start off by thanking all of you. It's Friday afternoon. It's 5 o'clock. You've had a very busy week, probably not that much sleep. And so I'm really very grateful to all of you for making the time to come to this event. So let me first of all welcome you on behalf of the Center for Global Development, but if I may also, I'd like to welcome you on behalf of the Ministry of Economic Cooperation and Development, Federal Republic of Germany, who are our partners in this event. And the purpose of this discussion really is to follow up on what has been a key topic for this week. A key topic for this week has been, how do we make progress on using the multilateral development banks as an instrument for scaling up and making more effective the support that they can give to developing countries for achieving their development goals and for taking on board the impact of global public goods, climate and other public goods on their development agenda and their contribution to the achievement of these global public goods. And I don't want to go into a long history of why we got to where we have. I hope that you all have by now seen or at least got the link to the second volume of the report that was produced by an independent experts group that was set up, commissioned by the G20 presidency, by Minister Sitaraman, who is here, and which has now completed its work in 2 volumes, both of which are available as of today, and it's about bigger, bolder, and better MDBs. That's the agenda that we have gone into some depth. Now, I should also just say to you that this week, some of you were in the meeting, some of you have been following the meetings of ministers and deputies. Personally, I have been very gratified by the consensus that has emerged on the scale of the challenge, on the urgency of action, on the need to equip the multilateral development banks to be able to play that role, both in terms of finance, but also in terms of their business models, in terms of the way they operate. And what I've taken away from this is that at the political level, we've now got an enabling environment to make progress. But really, whether or not we step up to that challenge depends very much on how the multilateral development banks, each one of them, and working together as a group, they are able to respond to that challenge. And what support do they need from the shareholders to ensure that this initial, I think Ajay Banga used the term that he felt the wind was in his sails after the meeting. Well, we want to make sure this is not just a quick burst of wind. It has to be wind that sails along, helps him sail and helps every leader of the MDBs sail forward with determination. So the way we're going to organize our event today is that I'm just going to ask Minister Schulz to come in and say her own words of welcome first. Then we're going to turn to Minister Nirmala Sitharaman, who is going to come and give us her view. And she has been, I've said this to her privately, and I want to say this publicly, that in terms of the work that we've done under the independent experts group, at the very first meeting, she set our sights at a level that I think was somewhat higher than people had anticipated being asked to do. And she and her team have really been extraordinary in providing the support to Larry Summers, to NK Singh, and to all the members of the independent expert group which have done their work. So we'll ask her to say something. Then we'll have a panel discussion. And the panel is really I want to bring back Minister Schulz for the panel, but I also want to bring in the representatives of the MDBs who are here, because the question I want to pose to each of you, I'll give you a little bit of a heads up, is really, how are you now going to take this forward? You've been given a task, and how can we help you to achieve that? And that will give us a chance then to open it up for your questions and comments, and then we'll bring it to a close at 6:30. That's the plan for the afternoon. So with your permission, Minister Schulz, could I ask you to please come and say your words of welcome?
So thank you so much, Minister Sitaram, all the representatives from the bank here, ladies and gentlemen. A warm welcome to this event, and thank you very much that you are all here, because the topic is so important. Yesterday, the Development Committee of the World Bank agreed on central pillars of the World Bank's reform about the evolution. And I think that is really a good message in our times now. On a multilateral level, we are able to agree, we are able to bring our reform forward, and I think that is really good news, because as an initiator behind this reform, I'm really convinced this reform will help to make the World Bank a better bank, a bank that will work more effectively and help to create a better world. That is what we want. The reform has given the World Bank a new vision, a world free of poverty on a livable planet. And it gives the bank a clear mandate to protect global public goods and address cross-border challenges, like fighting against climate change and biodiversity loss, preventing pandemics, and promoting peace and stability. And this means the bank can help countries invest in projects that benefit both the individual country itself and the international community as a whole. And for example, by saving rainforests, by building solar parks, or financing vaccines. Investments like these are investments in our common future. They are in global interest, and countries should therefore get support from the bank to make these investments really happen and to have the possibilities to do so. And at the same time, the reform also gives the bank more means to fulfill its new mandate. It helps the bank leverage more funds through private funding and really innovative financing mechanism. You just heard that before, but Germany has announced that we will provide 305 million euros in hybrid capital to the bank, and this will enable the bank to leverage up to $2.6 billion in funding. And this money could be used to address global challenges over the next 10 years. And innovations like that, these are really crucial to help to close the financing gap and get the Agenda 2030 back on track. They are crucial to protect the very basis of human life and security on this planet, and they are crucial to avoid future costs, losses, and damages, and to sustainably reduce poverty, hunger, and inequality. And the World Bank reform is a big step forward, but obviously the bank is not the only bank which we need to speed up transformation, which need to speed up transformational investment. All multilateral development banks need to rise to this challenge, and we need their combined power, and we need to use it better. So clearly, the regional development banks have to be included in the evolution process. Combined, their capital is equal that of the World Bank. Moreover, they respond to the specific needs of their regional members. Hence, they bring a lot of regional expertise and experience to the table. It is therefore crucial that the regional banks are part of the discussion how the multilateral development banks can help speed up progress on the Sustainable Development Goals. And that is exactly what is today's event about. Today, We want to bring all the multilateral banks together, and I look forward to discussing with the four of you as the presidents and vice presidents here. How can your bank work more effectively together to help protect global and regional public goods? How can they best use their respective strengths, and what would help them to mobilize more funding, support their clients more effectively, and create synergies? And of course, we are not starting from scratch with this discussion. Some good practices and analyses already exist, and they include the G20's review of the bank's capital adequate framework that was published last year, and it is recent proposals on how to advance the multilateral development bank's triple agenda. And it is really a great pleasure to have Minister Nirmala Sitharaman here with us today. She will elaborate more on these proposals, these really important proposals that were developed under the Indian G20 presidency and aim to at transforming the bank's business models. So let us use this meeting today to identify the barriers that are currently preventing the multilateral banks from realizing their full potential, as well as possible levers for change. And let us define concrete next steps to help to move forward the evolution of the multilateral development banks as a system. I really look forward to your ideas and to our exchange. Thank you very much.
Thank you very much, Svenja. Thank you, Minister Schulz. So, Minister, if I could ask you now to come in and give us your keynote.
Thank you very much for having me here today. Good evening, Minister Schulz, Dr. Ahmed, colleagues and friends. Just so that I don't stray too much from the core subject, I have before me my written speech, which I will follow through, giving intermediate breaks so that I can come up with any little additions that I want to make to my talk. I've lived through this for last 11 months. There's so much going in my head about MDB reforms. So it can be forever that I can keep talking. So pardon me, I'll start with the written speech, which of course you'll allow me to every now and then come up with some additions, extrapolations, or anything. So at the outset, let me thank Germany and the Center for Global Development for organizing this meeting and providing an opportunity to share my perspective on the subject of MDB evolution, and in particular on the report of the G20 Independent Expert Group on strengthening MDBs. The CGD has been a key partner in the work of the expert group. I thank Dr. Ahmed and the CGD for their support on this priority of the Indian G20 presidency. The global development financing architecture today is facing increasing demands. It is expected to provide support in addressing some of the toughest challenges in the recent history. The gains we made on poverty reduction and human development are reversing, and that's frightening. Unmet financing needs for the SDGs are ballooning, and global challenges are growing in urgency, scale, and also in complexity. These challenges are continuing to grow rapidly. The resources available to meet these needs are falling short. Existing resources are being spread too thin to simultaneously address developmental challenges at a country level and also the global challenges. Still, greater challenges loom ahead, arising from climate change, future pandemics, and natural disasters. Do all countries have adequate resources to meet their present needs? And also to invest in the provision of global public goods? The answer is plain to see, and we know what it is. No, not all of them do have adequate resources. We need drivers of development financing. The multilateral development banks have been playing a key role in providing development financing. Through a combination of affordable financing, efficient risk management, and in-depth knowledge about the client countries, they can catalyze public and private capital towards development financing. This is the core of what the development financing banks and institutions do. But today is different. Existing needs are unmet, and anticipated needs are mounting. MDBs today are finding it increasingly challenging to maneuver the complex development financing landscape. Their existing institutional framework and financial firepower are inadequate, to say the least, especially to meet the needs of the global south. The case for a comprehensive approach towards strengthening and evolving the MDBs is immediate and is urgent. Against this background, in February 2023, the Indian presidency, supported by the G20 membership, established the G20 Independent Expert Group on strengthening MDBs under the co-convenership of Professor Larry Summers and Mr. N.K. Singh. The group was established to provide guidance to MDBs on evolving and strengthening themselves to address the global challenges of the 21st century, with a continued focus on addressing the development needs of low and middle income countries. The group has brought out their report in 2 volumes, encapsulating their recommendations on this crucial agenda, both of which are now available in public domain and make a compelling reading on the global developmental financial landscape and also the role of MDBs. Let me make use of this opportunity to share with you 4 key messages from the G20 presidency's perspective. First, the MDBs need to evolve their operational model. The report recommends a transition from a project-based model to country-led, country-owned coordination mechanisms around priority objectives. This can help MDBs to develop a unified vision of goals, policies, investments, and financing required in a client country. This transformation should be well calibrated, taking into account the specific circumstances of the client countries, as countries are heavily dependent on MDBs for their core development financing needs. Second, the MDB system must become more than the sum of its entities. This ties in well with the core theme of today's seminar. MDBs are heterogeneous, with their mandates, governance, and priorities. Some MDBs have been leaner and faster. Others are experimenting with raising new forms of capital. Some are engaging with private sector, and some are better utilizing their balance sheets. There are innovations in different parts of the system. More collaboration will bring in efficiency gains in resource allocation. They can work better as a system through joint financing and risk sharing and information exchange, among other things. MDBs working as a system will ensure the convergence of all efforts, resulting in faster development gains. Third, the MDBs need to walk the talk when it comes to private capital mobilization. MDBs can no longer afford to rely only on public capital to evolve. According to an OECD study quoted in the IEG report, in 2021, only 10 cents of a private sector money was mobilized for each dollar of official finance. This is far too little given the scale of MDB resources and resources needed to support the efforts of client countries. The important question is, what can be done about it? The IEG recommends that MDBs explore financial innovations, including through various risk-sharing instruments. Various MDBs are already exploring hybrid capital, guarantees, inter alia. However, it is still early days. We need to understand how these instruments deliver, whether they need any design tweaks, and what should be done to strengthen the institutional mechanisms of the client countries to absorb the capital, this particular capital. Fourth, strengthening the financial capacity of the MDBs remains at the core of the MDB reform agenda. The IAG makes a strong case for early implementation of the CAF, the Capital Adequacy Framework, and its measures, a general capital increase, and the setting up of a global challenges funding mechanism as options for strengthening the financial capacity of MDBs. In G20 discussions, there were very diverse views. There is a view that the focus should remain on the capital adequacy framework and discuss a capital increase only if needed and following the full implementation of the CAF. The pertinent question to ask here is whether the implementation of CAF alone will make the MDBs better, bigger, and bolder, something which our leaders have asked for us to work on. That is in the Delhi Declaration. MDBs are expected to provide an incremental $260 billion of additional annual official financing. The G20 roadmap on the CAF measures estimates that implementation of CAF measures could potentially yield an additional lending headroom of $200 billion over the next decade, implying $20 billion annually. Capital adequacy framework reforms, while being a very important contributor to strengthening MDB's financing capacity, are not sufficient in themselves. Capital increase is an inevitability that we need to acknowledge. The question is not whether capital increase is needed, but rather when it is needed. Let me conclude by emphasizing that through the IEG report and the discussions that it generated, both within and outside the G20, there is a strong political momentum globally for the MDB reform and the reform agenda. Let me repeat that because I think that actually carries the story for all of us to work on. I emphasize that through the IEG report and the discussions that it generated both within and outside the G20, there is a strong political momentum globally for the MDB reform agenda. The New Delhi Leaders' Declaration, as well as the G20 Finance Ministers, Central Bank Governors' October communique, which has been released yesterday, have laid down a very clear way forward on how the IEG recommendations can be taken forward. The MDBs have a to-do list. they now have a well-considered set of suggestions on how to do it. Let us provide our mandates, our political will, and our unstinted support in strengthening them. If we, as shareholders, want MDBs to transform themselves radically and boldly, we have to set an example for them by thinking boldly and differently, in a radical departure from the incrementalism of the recent past. Otherwise, we risk undermining our messages to the MDBs and our credibility too. It is time for shareholders too, and not just the MDBs, to seize the moment. Let me stop here. Thank you once again for the opportunity to speak at this event. Thank you.
Well, I think there's very little doubt in terms of the message that we just received. So it's a very clear message, and I think now we would like to have a panel discussion in terms of, as the Minister Sitharaman just said, we've got the mandate, we've got the instructions, now how are we going to deliver on it? And we have a great panel to answer exactly that question. Well, we'll have the pleasure of having Minister Schulz back on the panels when he's going to join us. But then we also have Anshula Kant, Anshula sitting there. Anshula is Managing Director in the World Bank Group, very much a driver of the reform process inside the World Bank. We have Jordan Schwartz. Jordan Schwartz is the Executive Vice President at the Inter-American Development Bank. Very important right now because the Inter-American Development Bank is now assuming the role, I don't know whether they say presidency or coordinating role for the MDBs group. And so for the next year, a lot will depend on how they push that forward. And then we also have Swazi Shabalala, who is Senior Vice President at the African Development Bank. And of course, this week, in the absence of Akin Ancino, who's not here, Swazi has been doing double duty in all the meetings. And finally, we have Wu Chong. Wu Chong is, of course, Managing Director General at the Asian Development Bank. So I'm going to join them, and we're going to have a conversation. Okay, let's see if the microphones are working. They are. Excellent. Just to get started then, maybe I come back first to you, Minister, and ask you a question, which is, so we've heard all the message, and you laid it out yourself, but if you want to give the colleagues some instructions in terms of, well, not instructions, but a preview that when they come back to you in a year's time or 2 years' time, what will be some of the milestones that you will use to determine in your mind whether the progress on the agenda that has been laid out is satisfactory? What will you be looking for specifically in terms of progress?
I think it is really a step forward that we now have a new vision, that we have a new mission for the World Bank. But that is only the first step. Now it needs to be in the DNA of a bank, bringing that new thinking that is not only fighting against poverty, it is on a livable planet. And that means that taking into account what is changing in the world needs to be part of everything that is done in the bank system now. That is easier to say than to do, because that means if you are financing an agricultural project to change the way people in the regions that are heavily affected by droughts do their job, if you like to do that, you need to take into account that climate change is a reality, that they need to
deal with droughts, with floods, and that there needs to be a system that they are able to do so. And I would like to have that no country anymore need to choose between financing social protection systems or protecting the forest or protecting things that we need as world, or not to choose between social protection and vaccination. In this debt crisis, in this heavily situation, that means a lot to bring that forward. And what I like to see is that the whole system works better together, because the money is restricted. We don't get all the money we need. We need more money from the private sector. For everybody's here, we need it, yes. We need more money in the banking system, yes. But that will not be enough. We need also to work together in a better way, sharing knowledge. It's easier to say than to do so. But we need to, because we are in a perfect storm. We have such a lot of crises at the same time. And deliver the work a bank needs to do in such a perfect storm is really hard work, and we need to do that in a better way together as a system.
All right. Thank you. That's very clear. So maybe since we are furthest advanced in terms of the new mission in the World Bank, Anshula, actually a good question to you would be, how are you now going to translate this new mission statement, ending poverty on a livable planet? You've got resounding support, but everybody, you've got 15, whatever, thousands of people working in country offices, in the office, in Washington, in different places. Well, how does this mission statement translate into the way the World Bank Group operates?
First of all, thank you for inviting me, Masood, and I want to say that it was really heartening to hear from our two most important shareholders the same asks, the same expectations. So, I think we've really heard it loud and clear. And also very grateful to all our shareholders for resoundingly approving and endorsing the expanded vision and mission. That's exactly the work that we have been doing over the past few months. Financing capacity, increasing that is of course very critical on delivery, but it's also about how we operate. So if you see the parts of the vision and mission statement, what does it mean for us and how do we implement it? On the operating side, my colleague Anna, who's the MD in operations, she is really leading from the front on things which will make sure that we take this down to the country level. Masood, as you said, how we engage with countries, that's important. How, the World Bank being such an important knowledge partner with our client countries, how the knowledge also informs country partnership frameworks as we discuss them with countries, how we become more efficient, how we become more speedy, and how we measure outcomes. But most important of all, how we work with partners. And I think, yesterday I was in a co-financing event and one statement really stood out in my mind. It should be partnerships by design, not by accident. And that's what we are trying to do, to work better together, both at the country level and at the corporate level. I can go into a lot of details. We've written out a DC paper of 40 pages recently. So please ask me more if you want to, but together with all of this, of course, the financing is extremely important, as everyone has acknowledged and mentioned. Thank you for that. And thank you, Minister Schulz, for the 305 million euro, which translates into more than $2.5 billion of lending. Really appreciate it. It's so important in terms of the dollars and cents, but what it's really important is their endorsement of and their voice of support for these instruments. It's the first ever hybrid instrument from the MDB space that has got a concrete commitment. And I believe these instruments are here to stay. They are not a one-off. It is, I remember in 2008, we did our first green bond issuance, and that set the foundation for a more than $2 trillion market today. Maybe this will have the same future.
Great. Thank you very much.
Thank you.
I want to come back a bit to this question of the hybrid, because I know, Swazi, African Development Bank has been working a lot on the idea of using SDR allocation as sort of hybrid capital as well. And actually, one of the questions this leads me to is, that's just one example where two MDBs are working on a same set of issues. We can find many examples where over the next year or two, you will all be working in parallel on the finances. Actually, I should refer to the fact that you just issued today, the MDB heads met. They identified 5 different areas where they can cooperate more, where they can step up their cooperation. And one of those is indeed the issue of how they can work together to strengthen financing capacity. And there are a number of other areas. But John, can I come to you next? Because you are, as I said, IDB is going to be leading the process of the group. We've been talking about strengthening MDB collaboration for, I was going to say many years, but I think I can go further and say some decades. And it's always an area where we conclude that it hasn't gone as much as we could have gone. Agreed. From your point of view, where you sit now, and you look at the agenda for next year, where do you think are the most promising avenues where you could actually, a year, 18 months from now, come back to Minister Schultz and others and say, look, here are things that we are doing that we weren't doing before?
It's a great question, Masood, and thank you to the ministers for the warm welcome, and to our colleagues at the World Bank for bringing us together at the World Bank IMF Annual Meetings. Yeah, I think that there is a push from the MDBs themselves to try to raise the level of collaboration. As you probably know, there's a series of working groups that have probably been going on for decades, if not years, in areas like procurement and environmental and social governance. The CFOs and the CROs meet very regularly to talk about instrument design, both treasury instruments and instruments in front of our clients. But I think the question, as I understood it, as you posed it at the G20 meetings, was about systems integration, if you will, or working together better as a system. And I think it made us think about the systems that already exist for each MDB, right? Because in a way, each MDB has a systems challenge. It has both borrowers and shareholders. And Anshula referred to the importance of the two ministers, one in a sense representing a borrowing country and the other a non-borrowing country, being able to articulate a set of goals for the MDBs and a commitment to have them collaborate together. But we work to try to build consensus across within our own system. And all systems have their natural areas of stress. I guess all buildings need stress to stand up. And we're familiar with those stresses to bring consensus on our approaches, on our tools, which are financial instruments, and of course on our greater goals. And then to wrap horizontally this into a system also requires our shareholders to have a degree of consensus. That's really important. I think the G20 report, the G20 push on MDB collaboration brings us a lot closer together because it brings the shareholders, both the borrowers and the non-borrowers, much closer in articulating a consensus view on what some of the goals are. Adding global public goods, Minister Schultz just mentioned, I think rightly, climate, and then also pandemics, right? So we start to recognize that we've lived through the challenges of having very variant responses to global public challenges. And what would it mean if we as a system could wrap ourselves, if you will, horizontally around those challenges? So again, I think the goals being articulated by our shareholders is the first step. The approaches, which means our processes and the standards that we apply, the harmonization that we are working on and that we're going to need to step up quite a bit in the different instruments. And then the instruments themselves, make sure that they are complementary. So to be specific, I think going forward, we'll see on this agenda much more detailed deliverables that will be expected by the end of the year. We are working already at the heads level, at the deputies level, and then at, let's say, deliverable teams level. We're sort of gearing up, because I understand Brazil is very much in the same headspace as India to make sure that this remains a priority and has that shared experience that India does as a regional and global player in power, but also a borrower very familiar with the multilateral development banks. We are gearing up to be able to address specific challenges. So in the CFA area, the capital,
Right.
sorry, the CAF area, the capital adequacy, I think addressing the callable capital question that was articulated in the G20 report will be a priority and something that we will set into a timeline this year, as well as some of the information that are housed within our institutions that require a lot of collaboration in order to come together, such as is done through the GEM system, which is data on default and recovery rates. On standards, particularly on procurement, moving to environmental, social, and governance, let's pull out those that have been in discussion for so many years and bring those forwards. And on the harmonization of instruments, we offer similar forms of instruments sometimes, CAT DDOs from the World Bank, and we have contingency drawdown, contingency lines of credit for catastrophes. How can we make these more similar? Our clients can understand them. So those are the kind of agenda items, very specific, on a timeline, must deliver. Minister Schultz was going to be watching us. We know what the risks are of not delivering, and we appreciate the common goal setting of our own shareholders.
Thank you very much. So I really like the fact that you will have amongst yourselves some set of specific items on which we can identify a timeline for progress, and sort of a year from now, if we were to come together again, we'll be able to see how some of things will take longer, some will take less time. And I want to come, if I might use Swati, to ask you, one issue that is very much on the table now is how do we use concessional resources, particularly how do we use concessional resources to support and incentivize countries
Thank you.
to borrow for kinds of projects and to global public goods projects, which otherwise they might not prioritize in the same way. Now, you can do this in different ways. And the World Bank is in the process of producing a framework for concessionality. You will all have to think about that. I want to get a little bit your sense, just using that as an example, of do you have anything to add to what Jordan said about areas for collaboration? Do you see that as one of the priority areas? Are there any others that are high on your list?
First of all, thank you very much for the opportunity to be part of this panel. And let me also thank the G20 India, because of course a decision was made to invite the African Union as a permanent member of the G20. And I think, it is timely because, I'm not the first one to say it, but very often Africa's voice, the voice of beneficiaries, is missing from these discussions. So I think this is an excellent development. But also let me note that this is the first World Bank IMF meeting in Africa for 50 years. So I hope this is a great sign that Africans will be heard in this debate. But I think to build on what Jordan said, and if you had asked me the question first, I would have responded very much in line with them, because we've had discussions already as the regional development banks about what we should prioritize in terms of the asks and the marching orders from our shareholders. But I just want to set a context, because I think Africa is unique. The African Development Bank is unique. in the sense that, our shareholding, first of all, is very different from that of, our peers. So I think we have had to deal with many of these challenges that are now coming up, for discussion for a very long time. And in fact, it's interesting for us because a lot of this work which we are being asked to do now is work that we have been working on for a long time. I mean, we have been working on how we deliver on the ground. We've had a one bank focus, to ensure that we are on the ground and understand what our clients need, because that is the most important thing, and that we hear what their priorities are. But in addition to that, we've also been working on operational efficiency, because I think even before talking about working as a system, there are things that we can do internally to simply improve the way we process, transactions. We've been doing a lot of work around that. I think it's important. But also, I think because of the constraints, the unique constraints, I think, that we face, and the challenging portfolio, that we have, we've been very much focused on, mobilizing additional resources. This is something that we have been doing. And, the discussion around hybrid capital and SDR rechanneling, we worked very closely with the Inter-America Development Bank for a very long time. And I'm very happy to see that finally there is some traction. And we hope, very soon, we will also be able to conclude our own hybrid capital issuance with Germany and others as well. But I think on the issue of concessionality, it's a debate that we've been having. We have, all of us have, funds or instruments that basically are focused on deploying concessional resources. We have the African Development Fund, the World Bank has IDA, and all of us have these instruments. But what is increasingly clear is that, first of all, I think there's a question about the definition of concessionality, with differences between how OECD defines concessionality and how the IMF defines concessionality. So I think these are the things that we need to address as part of this agenda. But, in addition to that, it's also clear that there's a lot of middle-income countries who we've said all along, don't qualify for concessional resources, who clearly have pockets of concessionality. And in a world that is a lot more integrated, those weaknesses, those pockets of weaknesses, those pockets of fragility can go cross-border. So, I think that there is a lot, that we are doing. We have, for instance, as part of the latest replenishment of the African Development Fund, we introduced the climate action window. And thank you to Germany for supporting that. They were one of the first supporters of this climate action window, which has raised over $400 million. And it is intended to help countries with concessional resources to develop their long-term strategies and to develop their nationally determined, and because a lot of these countries, in order for them to be able to attract climate financing, need as a basic requirement these types of plans. And we think it's an important initiative, and we hope that the World Bank in particular, working with us in our region, will join us in scaling up these activities, because I think the issue of capacity, the issue of what countries are able to do, requires attention, and I think concessional resources should be deployed for that purpose.
Thank you very much, Swati. So, since you have already coordinated what you all want, there's no point in my asking you what your priorities are, because they'll be the same. So, but can I ask you a slightly different question? So you're all very forward we've got this, we've got priorities, we'll deliver, we'll have a timetable. But would you need any help for any of this? I mean, do you feel that you have any asks for your shareholders to help you do this? I mean, the shareholders are asking you to make some very quick decisions and, you know, turn your big ships around quickly. But do you feel that your processes for actually making the decisions are themselves maybe too slow to speed up your delivery? Do you have any thoughts on that?
Thank you very much. I can always count on you to ask me the toughest question. You know, as Minister Schultz said, and when I was listening to her remarks, you mentioned the word DNA, right?
Yeah.
You know, we need to change our DNA in every aspect of our work we do. You know, when we set our new strategy in 2018 for 10 years, you know, we said we're going to have $80 billion worth of climate financing. You know, we did that because we knew back then already that, you know, this planet is something that we didn't inherit from our ancestors, but we borrowed it from our future generations. So we need to give it back to them much better. And the world is not moving in the right direction. But what happened was in 2018, when we set our $80 billion target, we basically thought we can do like 10% more each year from 2018 scenario. But in 2021, in the midst of the pandemic, when all the countries are going crazy trying to deal with it, and we actually were able to squeeze some of our resources to produce about $20 billion more resources for vaccine and social protection and so forth. We decided, you know, this climate change is something that we cannot hold back. So what we did was, we did something that's unusual for ADB at the time, was we imagined what we can do in the future. So not what we've done, you know, doing a bit more than what we did in 2018, but in 2025 and onwards, what kind of technology that will be coming in to address the climate change, and, you know, both mitigation and adaptation, and how we can transform adaptation work so that we can actually do much bigger share of adaptation climate financing than the mitigation. So within the scope of our work that we do, we fundamentally changed the way we thought about what we need to do in transforming. So when you asked a specific question about what asks that we need to ask the shareholders, you know, we can do all we want at the management level to speed up, and we just recently launched this new operating model to get closer to the clients, to do better, you know, much more efficient way of processing projects so that we can try to half the processing time, shift more to climate, shift more to the new way of doing business, and the private sector. But at the end of the day, many of the reforms that we need to undertake, for example, next year when we meet, you should ask us, what have you done concretely? And everyone talks about harmonizing our policies and procedures, like safeguards. And we're actually right now in the midst of finalizing the new safeguard policy. You know, each one of us has you know, specific procedures. What kind of appetite is there among the shareholders, especially for organizations like ADB and the World Bank, where we basically share the same shareholders, to apply each other's policy? Right. Now, to do this, you know, it's a no-brainer, because if we do that, then it's easier for the clients, yeah, so that there's only one policy to follow. And it's not watering down what we're trying to do, because the principles are the same, just that we have two different processes that were approved by the board. But also from the shareholders' perspective, it's much easier and efficient to get things moving to the ground. Yep. But this requires collective decision. And what kind of appetite do we have across the different organizations to say, hey, for co-financing projects, follow one policy? Yeah. Whether it's procurement, whether it's safeguards, and whether it's whether it's governance policy. So I think that's something that we need to ask the shareholders to ask us, but also ask themselves, right, how much have you done? So that's one DNA that I want to change.
Thank you, Woo Chung. You see, that's why I asked you the question. Because, and I think you're really raising a very important point, which I hope actually we can maybe take away from this meeting, which is, I do wonder, I mean, just also from my personal experience, that sometimes you have the representatives of shareholders, of the same shareholder, on different boards across the system. How often are they singing from the same script? And you can see there's a degree of yes from the MDB representatives on the panel trying to hold back, saying that that's an issue. But it is something to take away. Now, I want to bring in some people, but Jordan, you look like you had something. No, okay,
I was
right.
just
So,
excited to be
okay. No, I thought you were.
booking the minister
All right.
on our
So
behalf.
now let me therefore at this stage, and maybe this is a question for shareholders to think about their internal processes for ensuring that all the different representatives actually talk to each other on any major issue, particularly if you're asking the institutions to harmonize. You know, it's a little hard. Now, as we open it up, I want to actually start with two shareholders who are here, who just to get a bit their perspective on this. And I've got Alexia Latotu sitting there for the US. And I think it's also very important to hear from Brazil, because you are taking forward the agenda. I think, Erivaldo, you're sitting here somewhere. There you are, right in the front, sorry. To hear from the two of you, perhaps, a bit your reaction to this panel, and then we'll invite others to come in for the time that we have left. Alexia, would you like to take the floor? Oh, you've already got a mic. This is so organized.
Hello, hello. There we go. Thank you so much, Masood. Thank you so much, Minister Schulze. I had an old Janet Jackson song in my head as you were talking, Masood, was "What have you done for me lately?" is I think what you were asking the MDBs to ask their shareholders. So listen, I think this has been a great discussion. I'd like to thank everybody up on the panel. I think the MDB leaders that you see on this panel are leaders, they're change agents, and they frankly have responded to the call. You know, Secretary Yellen a year ago made this call for MDB evolution. They've responded present and willing, and I think the work of the CAF, the work of the IEG, the G20 IEG, has just injected more urgency and momentum to this. And I've always said, Masood, that MDB evolution is as much about the shareholders as it is about the institutions. So if it comes to issues of culture, issues of risk-taking, issues of questioning conventional wisdom, I think those questions are for us as shareholders as much as they are for the MDBs, and it's that partnership that will make the difference. And on Shula's point, also about can shareholders not only also evolve, but also evolve kind of in the same direction, so that there is, you know, clear, similar asks and expectations. I think you made that point on Shula, which I think is really important, because if there's 15, 20 different pulls from MDBs in all these different directions, that's not very helpful, which does not mean we don't need lots of different ideas and that countries have slightly different perspectives they bring. We don't want groupthink, but after discussion, we need clarity of purpose and intent to be able to deliver impact on a sustainable basis. So if I think about a year ahead, Masood, and where we need to be, I would first say we need to both sprint and run a marathon, and that's tough. Sprint, because there's so much urgency and expectations from emerging and developing countries. Endurance, because the big wins will only come if we stick with it and keep the pressure on the reforms, including the more complicated ones. For example, on the financial capacity, really exploring the CAF recommendation around callable capital, and is there a way to derive more value from callable capital? That's a lot of tedious technical work, but it's worth doing. I also want to say that I think perhaps the wickedest problem in all of this will be around culture. It certainly is for me as a shareholder, frankly, but you know, how do you be more responsive? How do you act with more agility, with more speed? How are you incentivized to take a decision more than to hide behind someone else will take the decision? You know, I think those are issues that for all of us in our jobs are really difficult. And so I hope to see progress on that front as well. In terms of partnerships and working with the private sector, I think we need to stop, first of all, saying the private sector, because what is the private sector? Yeah. We need to be much more clear about, are we talking about financial institutions, about institutional investors? Are we talking about large corporates? Are we talking about the domestic private sector, which we should be, as well as the international private sector, and be much more specific and granular as well as ambitious about what we're trying to do. MDBs as a system, not new, but I am so excited about the new energy I see. I think Ilan and Jordan at the IDB will be perfect stewards of that agenda. I think the policy harmonization point that you made, Wochung, mutual reliance is a huge agenda, and if we can deliver on it, that would be great. I think the work on country platforms in the IEG report is really important. There can be different models, the Just Energy Transition Partnerships, the Egyptian model about NAFWE. We've got to make that work. And then finally, for some of the big financial innovations, I do think the system working together will give us the biggest buck of all, but the North Star, impact. Thank you to all the MDB heads.
I think that's very clear. Great. Thank you so much, Alexia. Now, I think let's just ask Erivaldo Gomez. Erivaldo, please.
Hi.
I should say that we were just talking about executive director. Senator Erivaldo is an executive director of the World Bank. Yes, please.
No, thank you very much. It's a pleasure to be here. It's a top priority for Brazil. We will continue. Actually, we start during the Italy's presidency with this discussion. We have the CAF now. During the India's presidency, we have these very important documents, that this independent evaluation group. So we need to continue this because the challenges are clear, huge, and urgent. No? So we are discussing about this challenge so a long time, and the time is passing, and we need really urgent action on that. And I truly believe that all MDBs, they may play an important role on that. And I will take something that Ms. Sabala, and also my dear friend Alexia, I think the system is too fragmented. We have too many MDBs, too many trust funds, too many FIFs, too many. We need to integrate better this system. Integrate. And I think we, not only in terms of goals, but also in terms of procedures, in terms of process. And we actually, my personal opinion, not Brazil, is that we should have a kind of doing business for MDBs and the whole system. I think there's a cost to operate in this system, and we need to reduce this cost to be more impactful. And the other thing is that it's what Alexa said. Totally agree. We need faster results. Everybody heard Ajay this morning. I think we are in a good path. Also, Elon and Jordan and all we are working on that. I truly believe that we need to review how we do our business. I think someone said about change the DNA, no? This is the real evolution, when you change the DNA. But it can be just an evolution in the traditional sense, no? Because according to Darwin, you need a long time to evolve. We need more speed on that. We need faster results. And I think we should focus more on domestic resource development.
Right.
More than mobilization, we need the domestic resource development, and we need private capital development, not only mobilization. We can't rely only on the tools that we have now. We need to develop new solutions. Thank you.
Thank you very much, Erivaldo. It's also very clear. And of course, you know, Brazil next year has a big role in advancing this agenda. And I must say, yesterday at the G20 ministers and governors meeting, the minister from Brazil was very clear that this was going to be a continuing priority. Now, I think we have time for maybe 3 questions, if there are any from the floor. Before I do want to come back to the panelists, just give them a minute. But let's see now. We've got the light shining in my eyes, so I think I have somebody there, someone in the first row, and the lady who's already got the microphone. Okay, finders keepers. So
I got well prepared.
I think
Thank you very much.
you had an inside track on the microphone.
Yeah, Christiane Leibach. I'm a member of the executive board of KfW, so one of the larger bilateral organizations. And I think we have had a lot of talks over the last couple of days bilaterally here on the one another. For me, when I look at MDB's work as a system, I think there's one issue which is very important to me, because most of the MDBs, as well as other development banks, have a government-to-government arm and have a private arm. It is true for the World Bank, with World Bank and on the one side an IFC. It is true for a lot of the other MDBs. And I think when we talk about the system, it means as well that we have to have shed some light on how that works together, because we all say private investment is so important, but it's, I think, easier said than done. And part of the question, which is for me part of when we talk about the system, is how do we bring those 2 sides of a coin closer together within the institutions and among all institutions?
Thank you. I think I mean, we'll come back to the panel, but I just want you to note now that one of the key messages from the independent expert group report is that the private sector engagement strategy has to be a whole of MDB strategy, not a strategy that is delegated to the private sector windows or arms of those institutions. Because a lot of what is needed can only be done by the sovereign arm, not just by the private sector arms. I think it's a very important point you raised. I think there was a gentleman over there, I believe, next, I think I've got, yes, you, with the hand still up, and then I will come out.
Thank you. My name is Dustin Schäfer. I work for Urgewald, based in Germany, human rights and environmental organization. I really appreciate to hear that many of the panelists already mentioned the safeguard systems of the banks, and I also want to highlight in this reform process that we talk a lot about resources, additional money, additional spending. We have to speed up. And I want to highlight that this speeding up and more funding also results in more risk, not only financial risk, but also environmental and social risk for the people on the ground who, at the end, should benefit of the additional money. That's why we're here, I guess. So that's why I just wanted to ask to the panelists also if there are efforts to collaborate between not only the accountability mechanisms between the MDBs, but in general the 5 I's. We have audit, we have integrity, we have IEG, we have the inspection panel and the CAO at the World Bank Group. And whether we can find a good, I'm sure there's a ratio between the resources that we should spend on our monitoring and risk management systems, which are linked to the money that we spend for the different purposes that we have, and that would be very interesting to hear.
Very good point, I think. And then I think the gentleman right next to you, so for ease we'll do that, then I'll come to you next, sir. Yeah.
Thank you very much. This is Amadou Hott, Special Envoy of President Adesina on green infrastructure and former Minister of Economy of Senegal. Just a quick one on the concessional financing for global public goods. You know, everybody talks about this, and if the country is a middle-income country, you give, let's say, concessional financing for global public goods. But if it is a low-income country, would we consider then grant resources in the same way, for example, or for either, if a country, depending on its debt risk, you give them 100% grant, 50% grant, or 0% grant, right? Can we maybe think about the same for a low-income country dealing with global public good to ensure that we are giving them grants and not concessional loans? Thank you.
Thank you very much, Amadou. So I think this is a point that you, when you do your work on concessionality, I think you need to take on board. Are we talking about concessionality for middle-income countries for global public goods, or also we talking about more attractive terms, maybe grant financing for similar kinds of projects in countries that already receive concessional financing? Okay, I think gentleman right in the front here, and then I'm kind of thinking we need to bring this right in the front here, please. Thank you.
Thank you very much, Masood. Of course, you know me personally, but for others, I'm a senior advisor to Saudi Executive Director at the World Bank Board. I want to be cautious. I have two questions which arise out of my professional curiosity, and they do not necessarily imply a Saudi policy position. Okay, the first question is about the headline. In the IEG volume 2 report is, I think it's a bigger, bolder, and better bank.
Right.
So the sequence must have a meaning, at least in their mind. I wish they were present here. Whereas what the World Bank has presented to governors yesterday for endorsement is better, bigger, and more effective. So to me, bolder means more risk, and risk has many dimensions. I will consume 10 minutes if I elaborate. Right. So that's the first question. If any or of the panelists can reflect on what they see the two difference in the two headlines.
Right.
My second question is about the volume 1 report had a mention about, it looked like a passing mention, not as a recommendation, but mention nevertheless, combining IDA and IBRD balance sheets. I think the ADB has done something similar. Right. So Mr. Om or anyone else, if there is any reflection. Thank you.
Great. Thank you very much. Is there a message in better coming before bigger or bigger coming before better? You know, that's the first question. We'll come to that now. I think maybe this is not a bad moment to bring the panel back, because we don't have that much time. So can I start with you, Swazi? Just a quick response to any of the points that you've heard.
Thank you. Thank you very much. And it's because I need to run
yes,
to the next meeting. Yes. So I thought maybe I should come in first. I mean, the way that I see the bigger, better, bolder is that given the structure that we have at the moment, there is an element of having to address bigger. Maybe in parallel with better, because as I said, there's a lot of things that we can do to be better before we can really be bold. Because I think bold implies a new way of looking at, new approaches to risk, which, requires that, we are bigger. And also because of the scale of the problem, and effectively the question is to direct to Alexia. If we want greater impact, we need more resources, and those more resources are necessary to mobilize private sector. I mean, I think it's quite clear that the mobilization of private sector financing is complex. We say it very casually that we can mobilize the private sector. But in fact, we need to make sure that we have a balance sheet to be able to do that for the private sector. So I wanted to make that point. Thank you very much.
Thank you very much, Swazi. So we know you have to rush off to do double duty. So thanks again for joining us for this panel. And we'll just continue with the others. Wuchong, any reactions to any of the...
Yeah, let me take the question about the private sector window.
Yes.
In the old ADB, long time ago especially, we have private sector windows just like everybody else. And our country offices were focusing on public sector investment and treated private sector as some other species, right? But under the new operating model, when we changed the whole shift to private sector, we actually made our country offices product agnostic. So the country director is responsible for advising the government and putting the biggest possible footprint involving both public and private. But then, the country directors are not expected to be the bankers, but they are supposed to open the door and create the enabling environment and let the bankers come in and do actual deals. And in the entire new operating model, our private sector shift focuses on looking at upstream work, working with the public sector to create that enabling environment, and the midstream work to do more project development, more PPP, transaction advisory, and continue to do more investments with the public-private sector, non-sovereign backed investments, whether it's loan, equity, or guarantee, so that there's more crowding in the private capital. So that's what we're doing, and really changing the DNA of how we think about public or private sector.
Thank you very much, Wuchong. Jordan, can I come to you next? Any pick up on any points that you like? Any final thoughts?
Sure, I'll reflect very quickly on this private sector point because I have a slightly different perspective. Maybe that'll be interesting. So the institution where I'm working, the Inter-American Development Bank, has common representation between our private sector and public sector divisions, and like the Asian Development Bank has common location in all of our offices, and I think a tradition of very close collaboration. We have, I think, increasing and rightly concern about mobilization, make greater use of our resources, and as with the ADB and the World Bank, divisions that focus on structured finance, public-private partnerships, the use of guarantees, that is the institution's own guarantees, and other viability gap funding mechanisms in order to crowd in private capital on good projects, projects that we help structure. What I think gets missing from this conversation, and where I guess we get back into the kinds of issues we'll bring back to our shareholders, is the role of the institutions, both the public and private sector, in helping countries to create markets. Where these institutions, in my own experience, have had the biggest bang for the buck in bringing in the private sector in a sustainable way is where we've invested with governments in creating the rules of exchange and dispatch, in energy markets, in property markets, in capital markets, as Edivaldo was saying, for domestic resource mobilization, in tax and labor markets. This is really hard work, and it requires mixtures of policy and occasionally public sector investment in order for the private sector to be able to come in and invest. So when the multilateral development banks, the World Bank, the EBRD, EIB worked on the creation of Turkey's energy markets over the course of 5 or 8 years, with all the policies, the regulations, the creation of the wholesale markets and spot markets, the amount of private investment that came in on the back of that was orders of magnitude more than the cost of that intervention. So we focus sometimes, including people with a background like myself in infrastructure finance, on the box, what goes into the box, that's private capital mobilization. We sometimes leave aside the hard work to create markets and competitiveness. So I think we would like to see our institution redouble our efforts to do both things. It's not an either or, but it's both things. And I think that will require sort of a nuanced and technical discussion with our shareholders so they understand that representation. This question that was asked by I didn't understand the organization, I didn't catch the organization that you
MDBs.
Oh, thank you. Yeah. I have a translation from a minister at the same time. That was kind of impressive. It's a great question. I think your point about time and risk is absolutely correct. People in the business of structuring projects, of preparing projects, of having lived through feasibility studies and construction, and have looked back on the projects and programs, investments that have been made to see whether they're actually doing what they're doing, recognize the relationship between the proper investment in consultations, environmental impact assessments, financial and technical feasibility work, and the seriousness and intent that goes into that work, and the results that come out of the other end of the pipes and at the other end of the generation plants or on the flood management systems or whatever it is we're investing in. So I think to the point of where we squeeze, understanding why we're cutting or shaving processes, where we really are attacking inefficiencies versus just trying to deliver a faster time for the sake of saying we've delivered a faster time is really important. It's really important. And it takes really like nerdy operational people involved with this in consultations with civil society and our clients on the ground. It's not a rhetorical flourish. It's something we really have to work on to keep that balance. So I appreciate that question. And on that difficult question about how much you invest
in basically the oversight mechanisms that keep the institutions themselves healthy and providing the kinds of services, investments that our clients need. And by clients, I mean not only the governments, but more importantly, the users and consumers of services and the taxpayers of those countries. I think that's primarily a function for our shareholders to decide how you divide those. But the robustness of those institutions and their ability to communicate with each other is extremely important as well, and probably something that should be put into the MDB system discussion. So I appreciate you for raising those important questions.
Thank you very much, Jordan. Anshula.
Yeah, this was a great interaction and good interventions from Alexia, Erivaldo, and others. Thank you. So I just want to touch briefly upon Christian's your question. You know, how are we internally, for instance, IFC, MIGA, IBRD, IDA, working better together? There's a lot of work going on in that area, but particularly in terms of how we deliver to clients. You know, if you think about a project, we talk about private capital mobilization, but is there a room for an IBRD, IDA project where we need to do PCM and we get IFC and MIGA to work alongside us? So that is the kind of thinking we are having. Where does it make more sense for a particular part of the project or a particular product from one institution or the other to sit in terms of their ability to deliver, in terms of the capital efficiency across the group. And specifically on MIGA, you know, I want to bring MIGA into this conversation because MIGA is our guarantee experts. They have political risk insurance guarantees. They have non-ordering guarantees. And I think what internally we are thinking is that because we have that expertise sitting, for instance, in MIGA, one, they've already got approval from our board to underwrite other MDBs, including IBRD, for some of the risks and free up some of the balance sheet space with other MDBs. That's MDB collaboration, which is even more concrete in real terms in dollars and cents. The other is that MIGA has capacities to scale, so we are really pushing very hard how we can scale prudently, and can MIGA then, with their expertise on guarantees, help IBRD, IDA, and IFC together to actually be our fulcrum for offering guarantees in different contexts. So, you know, there are multiple things we are trying to do together. We are calling it the One World Bank Group approach internally. And, you know, it is about front office, it is about mid office, it is about back office, it's about capital optimization, it is about product optimization and delivery. So that's where we are. And of course, you know, one other little point I want to mention is IFC has started working. We've got approval from our board. We are working on something called a warehouse-enabled securitization platform, which is going to serve other private sector MDB assets as well. It's not just for IFC. So we put different assets, pools of assets, pool these assets, and then whether we can securitize and eventually start originating to distribute assets in a manner which are more amenable for distribution and securitization. So there's a lot of work going on in private capital mobilization. And of course, you know, Jordan, to your point about upstream work that IBRD and IDA do, we are calling it the private capital enabler. It's the PCE. We are working out metrics for that. How do you measure the impact of those efforts that we do? But also think about it, when an IBRD or an IDA arm is together in a project with a private sector entity, it de-risks the project in multiple ways. One, of course, is blended finance, first loss guarantee. Those are the specific instruments. But you know, this nebulous upside that you get about our ability to talk to client governments about sudden changes in policies, frameworks, that kind of risk really gets mitigated if we are part of the project. So, you know, there are these multiple ways we are working together, and this is not easy. We've talked about the private sector investment lab. We've had one meeting with 15 of the world's top CEOs, co-chaired by Mark and Ashriti. Some good ideas are coming out of it, but it's going to be a lot of hard work and uphill task for us. We are game for it.
Thank you very much, Anshula. So, Svenja, you have the final word. You've listened to all of these things, and I wanted to get your parting thoughts on and also on sort of what you see as next steps now.
Yeah. I think it is really clear that we just started the endeavor. Yeah, here in the discussion, there were a lot of aspects where we need to work on, and that is really something that we need to realize. It is work to work together, work to see where we agree. And I think that is something that changes, that we look more on that where we agree and not where we disagree, and more the focus is on how we can work together. And making that possible, bringing that forward, that is the endeavor we have now before us. And what I like to point out again, and I think that is really, really important, that needs strong leadership. And I think with R.J. Banga, we see a strong leadership in the World Bank with he and his team. We see strong leaders in the multi-development banks. And we need strong leadership by the shareholders also. We need also to bring that forward, speak with one voice. It was mentioned before that it's also easier to say than to deliver. This leadership, that is needed now, and I think that it is really a good start, but it needs to go in the DNA, and that is where we need to take care about, and we will do so. Germany will look at that. So, you know, in a German way, we will always remember you to do that. But I think it is needed, and that is obvious, and we see that. Thank you very much for taking part in that discussion here.
Thank you very much, Svenja.
Thank you.
So I want to thank all the panelists, but let me just end by just saying one thing, which is that, you know, I've been through lots of moments of MDB history and evolution, and there are some inflection points where you see things coming together that move you onto a different trajectory or a different level. And I really do feel that we are at one of those inflection points now. And I feel personally quite heartened by the combination of the fact that you have a clear understanding of the scale of the challenge, that there's a discontinuity in terms of the scale of the challenge, a clear understanding that we don't have much time left to deal with the challenge. So that I think there is and it comes from a variety of sources. I think a clearer sense of what needs to be done and a consensus on what needs to be done amongst shareholders and amongst MDB leadership, and also a political push and momentum to make progress, which is also quite a broad-based political momentum. So this just sets us up for that, doesn't guarantee it, but we are, I feel, in a better place than we have been in a long, long time. And I want us to sort of leave on that thought. And let me just also remind you that a tape version, a video recording of this session has been made and will be on CGD's website. So for those of your colleagues who missed it in person, they can always, and if you want to watch it again, feel free to do so. Thank you all very much.
That would be too optimistic.
Nice, Masood.